Okay, Uranium Bros, we're going to do something a little different today. I'm going to give you your own video because you're just that special and I'm just that kind of guy. So let's get right into it. Let's not waste any time. So first of all, we've been talking about the ambiguity here on the SPUT physical, right? So we have multiple patterns that could have taken place, right? You have this inverse head and shoulders pattern right here with the clear neckline. So that's a very bullish pattern that's been threatening to break out right here, right? And then you also had in confluence with the rest of the sector a more traditional head and shoulders taking place right here, okay, with another clear neckline that was well on its way to playing out until this day took it up where the rest of the market went down. So what do we think now after this Monday and a bit of a rally across the entire broad market? Well, I will say that on this rolling over pooping volume on what's supposed to be a breakout from an inverse head and shoulders, you're probably not going to get it. I was pointing this out for several days now. Also, the weak divergences here on the RSI. You know, you're making higher prices, but you're flat. You were declining a little bit. It's managed to come as good as flat now on your RSI. But I'm not a buyer. I don't think it looks too good. This is just one more day when the broad markets are catching a rally, and uranium, as it always does, is following suit. Uranium has no legs of its own. It hasn't decoupled yet from the market. That's an illusion. That has not happened. This is very self-evident, especially when you look at the charts. And there's no reason to believe that's going to happen until you either get this final flush down in the markets where you get this capitulation event and people really accept from a mentality point of view of where we are in this broad long-term bear market with persistent inflation. Once people change their mind and the way they're thinking and viewing about this market, they'll change the way that they invest, and uranium will become a more interesting play that could decouple it from the S&P. Okay, because as we go into this energy crisis, you guys all understand the thesis here, but that's not really going to have any legs until people really change the way they're looking at this market. And right now, people are looking at this market from a perspective that the Fed is actually going to stop inflation. You have a lot of really silly rookie people out there who are extraordinarily ignorant to how the system works and what's actually going on in the macro, who actually believe that the Fed's fighting inflation and that they have a chance to stop it, which is just the opposite of the truth. Once people figure that out, the entire dynamic of the market is going to change, and you'll start to see some decoupling of several sectors. Uranium is one of them. Precious metals is another. But until that time, the momentum is down, and you should not be buying for two reasons. One is because you can expect that as the broad market has lower to go, and because uranium trades in sync with the broad markets, and as it puts in all these bearish patterns, it stands to reason that you're going to get more downside. Also, reason number two is that the charts and all the technicals and the indicators are not giving you a buy signal. So there's really no reason to be buying right here. I mean, you are in the middle of a descending channel here in the case of URA. This is the ETF. And so why would you buy here? It doesn't really make any sense. I mean, you had some news today that, Germany's keeping 3 of their reactors online. So what? I mean, so what? That doesn't mean anything necessarily bullish for uranium. It just means that Germany is that desperate for energy. Okay, it doesn't mean they're going to go build 3 new reactors or anything like that. It's not really going to impact supply or anything. It's just a testament to the broad energy crisis as a whole. So when you go out and you buy uranium on headlines like this, you're doing it wrong. You're supposed to be buying equities, regardless of the sector or what it is, in anticipation of headlines like that, right? You're supposed to buy the rumor, sell the news. If you're buying uranium today on this headline of Germany, then you're the sucker. You're buying what everybody else is selling, right? It doesn't make any sense. You really got to reconfigure the way you're thinking about your trades and kind of start over because you're doing it wrong. So long term, I will tell you that uranium is great. It's going to perform just fine over the long term for the years to come. But that doesn't mean you should be buying it right now. You should be waiting for this next leg down, a capitulation moment, especially with all these bearish patterns taking place. You have so much more room just to come down to test this trend. In this case, it's 10%. But if you get a full follow through of this pattern here, You can get a measured move by measuring from the highest point on our neckline. Okay, so that's 27%. That's also $5.10. If we were to get a true playthrough of that, let's say we were to break down right here, $5.10 puts you, about $13.65, about 27% lower than where we are. I mean, if you were to get a true breakdown of this pattern, that's a lot more downside. It's 30% more downside. At least 10% more downside, right, to come down and touch this trend line. And when you zoom out on a weekly view, I mean, you would really like to see what the technicals look like when you come down here and do that. Because once you do that, you will have lost your 200. You already see that your 50 is rolling over with a downward slope. Will come out on the monthly. You will lose your 50 on the monthly, right? Then that'll start rolling over too. So if the price goes much lower, even as lower as 10% lower, it's going to give a bad look for the uranium space. This is just looking at URA, okay? This is the ETF. So I just want you to have this in mind, understand, zooming out the big picture, what these moving averages look like, where you are, and kind of step back and just appreciate that you could have more downside before you have upside. Even though I will agree, in the long term, you're probably going to end up somewhere up here. Okay, you're going to break these all-time highs, right? You're going to come back and break them, or these recent highs. Yes, but you're not going to do it anytime soon. And that's the part that you really got to get through your head. You got to stop listening to all these shills who are constantly pumping uranium and just get some reality. Just get some reality, guys. Look, I own a lot of uranium. I'm going to continue to own a lot of uranium. But you have to be reasonable about it. You have to be realistic. You have to understand the macro situation. You got to just zoom, step back and look at everything. Okay, so we're going to look at Cameco here. Again, the Westinghouse deal. We lost our long-term trend here. And this is a big deal because when I always trying to express to you guys how bullish uranium was as a sector, you look at your flagship, which is Cameco, and you look at this clear parallel ascending channel. That's a bull trend right there, okay? And the trend is your friend, all right? And the trend was up until it wasn't, okay? We have fallen out. Now, that was big news, okay? You could consider that maybe anomalistic, and it has a chance to come back in and retest and recover. It could do that. It could regain that trend. But right now, you really have to see, can it do it? Because right now, I'm willing to bet, guys, what's going to happen is Cameco is going to make an attempt to come up here and retest this channel. And if it rolls over and gets denied, it's gonna go a bit lower. You're talking $20, if not $18, almost guaranteed, okay? Because that denial right there to get back into trend is going to be technically significant, all right? On the other hand, if you are able to get back in, maybe you come back and get to that 200, and then you fall back and retest the trend and then start rolling back up, that would be ideal in a bull case. So that's something you can be looking forward to in a bull case to get back in the trend and resume your bullish direction for the long term. Okay, but if Cameco fails right here, guys, I just want to point out to you that when you look at this in tandem with the broad markets and how they're rolling over and they're going to continue selling off even more, you really have to appreciate that the likelihood that Cameco and the rest of the U space go down too, especially as they're all printing these very bearish head and shoulder patterns, is quite high. This is something you really just need to step back and see and analyze. I'm not telling you that you need to go sell all of your uranium stocks, okay? You actually missed that opportunity. I tried to get you to sell here, 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 and here, right? Because when we came down here, I told you, it's like, look, if you miss this opportunity, if you bounce up here, you better sell here too, because that might be your last chance. Well, we came back down to finish this head and shoulders pattern. You're getting a rally. But again, as I had anticipated, if you did get this rally, you're going to have a confluence 3 ways on multiple time frames of serious resistance right here. It will effectively be the top of a kind of a W pattern. So that's its own level of resistance. You also have historical horizontals. You also have moving averages right there on the daily and also on the weekly. And, on an equity by equity basis, It's really hard to see us getting any higher than that, right? Just look at energy fuels. We're on the weekly time frame here. Let's say you beat this 50, which it's already testing and kind of getting slumped on. You still have to break that neckline again, and look how much trouble it had back here. For anyone who is new, I told you guys those Japanese restarts would fail. I told you that the price would roll back over, and we knew because you had an inverse head and shoulders pattern right here. And once you got up there, you had a terrible breakout. It was very, very ugly. It was screaming at you that it was going to fail and roll back over, and that's exactly what it did. And so you're getting a lot of these same kind of failure indicators here. To get back above this neckline now after failing here, it doesn't really make a lot of sense with these bearish patterns, with the macro looking the way it does. I don't buy it. It would take a major catalyst, some kind of a black swan, to really change things, to change the picture for uranium in the near term. And just look at how this inverse head and shoulders pattern failed. And remember, it wasn't just one equity. I mean, this existed in every uranium equity across the space in confluence. That's what made it so powerful. Well, incidentally, this is the same pattern everyone's banking on in SPUT physical, right? You're banking on the same inverse head and shoulders pattern right here that's doing what? It's barely breaking out on declining volume. That is an awful sign. That is not convincing, and it's probably going to fail the same way the equities failed, and is probably coming all the way back to trend, if not falling out of trend like Cameco has, until this broad market rollover sell-off is done. So with that, guys, I will tell you that long-term, yep, you can accumulate your uranium equities over time and build your positions, but you can't be doing it in the middle of these downtrends while you're also in another downtrend within a downtrend. Does that make sense? You're going lower. Okay, so if you want to buy, if you want to add, do it at a better price that's inevitably coming in the future, at least 10% down, maybe as much as 30%. Be patient. Don't FOMO. I'm telling you, this stuff is not going anywhere. Look, the great thing about uranium is that it always tells its hand. It always tells you what it's going to do. That's what makes it so easy to chart. That's what makes it so easy to predict. That's why we, are so successful trading uranium on this channel, is because we predict every single solitary pivot ever. All right. And we can do that because the technicals are so easy to read on it. And right now, like I just laid out for you, the technicals are pointing downward. So just be patient. Don't let these headlines, zip you around and fool you out of good money, good cash. Just wait. You'll get a better opportunity to buy more uranium at a better price at a later date for further upside.